was if it were to clear these dots right here from the half trend, was gonna go hit this number 4,000, and because of the expectation was super high, uh, we were kind of playing both sides, and it worked out both sides actually. I exited my trade right before the number because it was hitting 100% or better than 100%. There was no point holding on to that trade. Got out of that trade myself and LA for life, and held on to the. Actually, I closed some of the downside as well for a 50% loss. Then I held a couple of them for the downside. That went pretty decent too. So all in all, a good start for the day. And right now, it came down all the way to the 200 moving average right here, and it bounced off of that number right about here, right? 39.30. And today I'm expecting this to hold 39.30. If it breaches down there, then we'll look forward for further downside, perhaps into 3900, and then push lower all the way down into right about here, 39.20, 39.21. This should hold for ES. That 39.30 to 39.20, this range should hold for the ES. If it breaches there, we are looking for further downside into 3904 to 3900. And again, SPX, that mean SPX would be down into 3890, somewhere about there. And if that breaches, it's going to come back down all the way down here into 3860. As of now, not really plotting that 3860, but I would really want to see that happen, right? Uh, this is starting, the MACD on the daily is starting to make a trend. That is starting to make a trend. So either I'm saying, I know it should hit right about here, 39.45, 39.40, and we'll try and bounce again. But if that breaches, then 39.30, then it's gonna push all the way into 39.20. If that breaches 3900, right? That's the way I'm planning right now. Yeah, and I'm looking at what is this thing? Okay, Friday, December 16th will expire. Okay, cool thing. And this chart on this is the weekly chart. It is still in an uptrend, general uptrend here. And now, what I'm thinking is that we still have this MACD crossing to the upside, the stochastics and RSI coming to the downside. I think I would say that this is a technical push to the downside. RSI hitting all the way up here, the average on the RSI hitting all the way up here. So this general downturn, the short-term digestion that we are expecting happen. Now the upside, this number today, the PPI number was an upset. The markets were clearly looking to push to the upside, but the number came in hotter than expected, the PPI number, and that is a clear upset, and we can see that in the market reaction. Even with that upset, the market is not really pushing to the downside as much as I would have expected it to push. So it did not. The move to the upside was meeting my expectation, but the move to the downside did not meet my expectation. So what does that mean? Maybe the market is still thinking that there is room to the upside, running into the CPI. The next is the FOMC. So I think the even if CPI comes in hotter than expected, like the PPI today, I think it's going to push to the downside on the CPI day, and then next day, the FOMC will come in lighter than expected. That is coming down from 75 bips to 50 bips, and very likely the market will push to the upside. So that's what I'm expecting for the next week. Right. So downside, if it breaches here, the mean about 39.40 or something like that, it's going to come back down into 39.30. If 39.30 breaches, then we are looking at right about here, 39.20. If that breaches, we are looking at 3900. And on the weak side of things, if it and then yesterday, day before yesterday, I think it came down all the way to hit the mean, and it is still hitting the mean today. And the expectation now is building for it to push down towards the lower inner Bollinger Band. That is sitting at about 3860, 3870 as of now. Not really expecting a push to the downside just yet, but if it comes back down and tests that 3920 on ES side of things, And if that 39.20 breaches, then I'll start looking for a push down lower into 39.2 and then 39.60, 38.60, sorry. So yeah, that's the way it's going to go. And let's get into the key metric here, the 10-year. 10-year pushed up. You can see here, as soon as the data came out, 10-year pushed up, right? And the expectation was that data would come in lighter than expected, and it will breach down here and push 3.46. And very likely, the idea was for it to push into 3.44 and stall somewhere around here till the market opens, and then push to the downside further. That was the idea, but did not happen. Now the push is happening to the upside. It is clearly hitting this resistance here, and 3.51. It was. I'm expecting it to kind of stop here for now, because in light of the FOMC being 50 bips, so expecting this to kind of stall around here. Look at the same data here on the daily, and it starts to make sense. The bounce, yesterday we were saying that if it bounced, it's gonna hit the 5, then the 8. It hit the 8 and starting to take a breather. And now if it clears the 8 again, then I'll start to look at it in a serious manner, probably 3.55 or somewhere there. If it clears there, then I'm looking for a push into 3.61 to 3.65. As of now, that is not the base case for it to go all the way up into 3.61. However, if it starts to move to the upside and clears this 3.55 line and start to push to the upside, 3.6, 3.61, obviously market's going to push down into 3920 to 3900. And if the mean reversion happens today itself, 3.65, 3.66, then market will push down further. That's 15 bips on the 10-year. Look at this chart here. This chart is not in agreement with this chart because this is a technical bounce here, fair enough. And the MACD is about to cross to the upside, but it's not there yet. And this chart, on the weekly chart, the MACD is still crossed to the downside, right? And now this is a bit of an issue, if you will. The 10-year is still crossed to the downside, and look at this thing, the SPX. This is, of course, futures, but SPX is the same thing. The MACD is crossed to the downside. So which one would you believe? I don't know yet. I think if I were to be, if I were to be a long-term investor, what I would do is I would believe in this. I would believe in the rates going down. That's what I would believe in, and probably, I'd get into something like a TLT for longer term, or anything that gives me the bonds play. So that's what I would be looking at. But as a trader, as a day trader, I don't really care about any of that stuff. I would probably still go down here, and if it starts to push above the 100 moving average, I'll probably look to short the market. And right here, it has made a gap between the anchor moving average and the price itself. So I'm expecting it to probably come back down here and hit this number and then start to push to the upside. Right? And yeah, if the 10 years coming down, then I'll look for markets to push to the upside, probably 39. What were we looking for? 39.70. Oh, it cleared that. Look at that. No, this is different. Okay, this is different. I need to take care of that. Right. So right here. So now the expectation is that even if it bounces, I'm thinking that this is an ephemeral bounce, probably come back up into 3.65 to 3.71, right? So expecting this kind of a bounce and probably again a push to the downside. And if it comes back down to the mean again, 3.52, 3.51, it will push down all the way down here into 3.34. This is still the expectation, and especially if the 21 crosses below the 8, if the 8 crosses below the 21 on the weekly, then I think it will make a clear trend for it to push to the downside. Very likely, I'm expecting it to come back down into 3. But for now, we're looking for a bounce. If it clears the mean, then we are expecting it to hit the 5. If it hits the 5, then it's gonna hit the 8. And if 10-year takes this path to the upside, the markets will be down. And if the 10-year takes this path to the downside and push lower from here, the markets will move up. Of course, it's not that simple. It's not that binary. It's not that straightforward, right? Then you have to consider something like an oil. Oil is pushing down, and oil is by and large the barometer for global growth, right? And this thing is pushing down right now. Right. Let's see here on the monthly chart. So this chart we've been following oil, and we've been pretty bearish on oil for it to come back. Not bearish, but we were expecting this technicals to get hit. And right now that's what is happening. I'm expecting oil to kind of stabilize around here between these two lines, about 72.50 all the way down here into 71.20. It should stabilize somewhere about here. And if it breaches down there, then expect it to move all the way down here into 64 to 60, yeah, 64 around that number, the 50 moving average on the month, around 64, 65. I think it needs to stabilize if it breaches here. So that's about the 6 points lower, 6 to 7 points lower on oil if it breaches here, right? And that's one big concern. Uh, we don't want to see another, another negative shock on oil. I don't think that's going to happen, but still, if oil pushes down, which I'm still thinking because the MACD is still crossed to the downside, then oil will pull the markets down with it. And probably we'll see. It's hard to read actually. It's not that simple because you have the 10-year kind of coming down, oil coming down. Which one would you believe? But by and large, this is what I would want to see. If oil comes down, I think the market will pull back with oil. Let's look at this guy. And this guy is another thing that you want to be watching, the dollar index. Dollar index, my expectation is for it to come back down right about here, 102.30, 102.50. The monthly inner Bollinger Band, or actually 21 here on the month, 101 to 102. That's the range I want to see DXY come down. If MACD crosses here to the downside, then that'll start to make a clear trend. And for now, on the week, it is getting oversold here. And if 10 years starts to bounce, I think the DXY will also start to bounce. And a good bounce spot for DXY is about here, 103.50 to 103.80 range. I would expect it to hit this number and start to bounce again. How far? Even right now, it's a good spot for it to start a bounce, but still, if the 10-year comes down, there's no point for this to bounce, right? And PPI comes in hotter than expected. This thing is bouncing, fair enough. And if it bounces, let's plot the bounce. Looking for 105.70. Then if that clears, 106.20. 5 on the week, it should hit this. If it bounces, then take a breather. If it clears 106.20, then looking forward for a push all the way up into 107.20. And if DXY, obviously, if DXY takes to the push to the pushes to the upside, the first thing that you want to do is short metals, especially gold, because this is one-to-one correlation between gold and dollar index. If dollar index goes down, goes up, gold comes down. If dollar goes up, gold comes down. If dollar goes down, gold moves up. Straightforward stuff. Right. And what else? Let's look at the same data here. Right. So looking at the DXY on the daily, it is still pinned below the 5 and 8. And we would want to see this trend continue. However, look at this data here. MACD is about to cross the upside. And it looks like it's not going to go well with gold. So looking forward for a hit of 105.20 around here on the 5 for the daily. If it clears here, then we are looking for the 8 on the daily, 105 20, 105.30. That clears, all push all the way into 105.70, 105.80. Still looking for this 200 moving average on the daily to act as resistance. The mean hasn't come down yet, so mean reversion will happen at some point, but this will act, the 200 moving average will act as resistance for the DXY yet. So if If DXY takes this path to the upside, then obviously the markets being the risk assets, including crypto, will start to push to the downside. And as soon as it hits this 200 moving average, I'll be looking for a push down. That will either be a scalp opportunity or go long opportunity in the markets. Cool. Then let's look at VIX itself. VIX is trying to bounce, and VIX again, the same story. VIX comes back up. It has been trying to clear this moving averages, both of them right here, the 100 and the 200. It's been a while that it's been, I think, trying for 3 days straight. And yesterday it actually hit this number, but unable to clear that. This will continue to the 200 and the 100 moving averages on the week will continue to act as pretty decent support because coming down they acted as pretty decent support. Now going back up it will act as pretty decent resistance. That's just how moving averages work. Again, I'm looking for a hit of this number and get pushed down, and once VIX clears these two moving averages, very likely there's a good chance that VIX will take off perhaps all the way into 25 to 26. But as of now, not plotting that. The 200 and the 100 on the weekly is the resistance. If it clears there, looking for a hit of 24 and push down from there for a breather. And if it clears at 24, then we are looking for a hit of 25.50 to 26 to 26.30 as of now. The 50 moving average on the week. Right, so if it clears the 200 moving average here, expecting the hit of 50 moving average, of course not in a straight line. It will, if it clears the 100 moving average, 200 moving average, it's going to go hit the 8 on the week and take a breather from there. If it clears the 8, then we're looking for a hit of 21 and the mean, and again a breather. If it clears there, it should hit this 26.20, 26.30 range and take a breather again. So that's how it's going to go to the upside. But for all of that to happen, it has to clear this 200 moving average and the 100 moving average on the week. This should act as very, very, very decent resistance. Cool. Let's get into Apple. Apple to the downside, the risk remains the same exact range, right about here, 140.98 to 140.50. This risk remains to the downside, and if it hits that, I'll again look for another bounce. But by and large, same range. The 5 on the day, yesterday it hit that and took a breather from there. Unable to clear that yesterday, so looking forward for that test again. If it hits that number, I'm thinking it should hit that number. If it hits that number, and if it clears that number today, then looking forward for a push all the way into 144. Then again ahead of 144.60, 144.70, and by the time we'll see where the 5 and 8 are again. These are dynamic lines, and these keep moving. Right, so if it hits here and starts to take a breather from there, market will start to chop, and if it clears the 5 again and hits the 8 on the daily, very likely the market will start to push along to the upside with Apple. And to the upside, this chart doesn't really make sense for the day, but next week this chart will start to make a lot of sense. To the upside, 156, 146.50 remains, should act as very, very, very decent resistance. And if it clears there, then we'll look for again for a push all the way up into the mean, about 152 on the mean on the daily. Of course, these lines are again dynamic, and these will change as the data comes in. So next week, if it clears 146.30 to 146.50, I'm looking for again a hit of 150, and then that clears 152.50. That's how I'm looking at Apple for the next week. And to the downside, 142.30 right now where it is sitting. If that clears, and looking for a push all the way into 140.90, and if that clears, very likely 137, 138 to the downside. That's for the next week. I don't think it's going to happen today. I don't think 137 is a thing for today. Probably, I think the markets will wait for FOMC and CPI to figure out what they want to do with this. Let's get into Tesla. Tesla, 163 to 158. That still remains the downside for Tesla. I would assume that it's if the market sells off today, it's where it's going to hit that number and probably bounce off of that number. As of now, not plotting anything below this number for Tesla, and to the upside, not plotting anything above the 5 on the daily at about 186 for Tesla. Uh, just a short few, weeks ago, about 5 weeks ago, 6 weeks ago, I think. Even we were looking for the Tesla. We were looking for Tesla to come back into 180 and test that number. Today it's sub 180, and we are saying the upside is still 186 now. Look at this chart, and it will start to make sense, right? And we were looking for a hit of this number of just a few weeks back, and then it broke below there, and the expectation for Tesla is now to come back down and hit this 50 moving average for a bounce. And the MACD is still intact to the downside. Right, so MACD makes a lot of sense on the higher time frames. And even though this big spike happened here, this was an ephemeral spike, and the green line is still pointing to the downside, and the MACD is still crossed to the downside. So that is still in a trend to the downside. Right, let's get into Tesla here. So looking for a bounce, first bounce, if it starts to move to the downside, then looking for first bounce around 168, 167. I think we should get that push to the downside because the green line, the average RSI is still pointing down. Then we'll look for a bounce again. And the RSI itself is at the bottom of this range. And anytime it hits the bottom of the range, very likely a bounce comes through. So expecting this week it's a little different. I mean, next week it's a little different. Otherwise, I would have been looking for a clear bounce for Tesla, and I'm still looking for a bounce for Tesla around 200 moving average. If it doesn't bounce at the 200 moving average, then the 50 moving average on the month. Either of those two should be a bounce spot, and I am positioned that way. If it comes down there, I'll take a position and look for a bounce alongside that. But next week being the crucial week with CPI, I don't know if the CPI comes in hotter than expected and Tesla kind of pushes down all the way into 130. God knows. That's not the base case, but if that happens, then I'll be in trouble, right? So if you are looking for a trade there, looking for the Tesla bounce, uh, hedge yourself going into next week. Just hedge yourself. At least half a position of that Tesla trade, hedge yourself. Cool. Looking for today, looking for another bounce around 167, 168. Let's go here on the 1 hour chart. It's still overbought here. It needs to come back down. Very likely, if it starts to push to the downside, it's going to hit this 170.70. That breaches about 169. 50. If that breaches, then we're going to push all the way down into 167.30. Cool. Apple about to hit all right, let it do its thing. And I think Apple will still remain range bound. If it breaches below the mean, which I'm thinking it should breach below the mean again, and it should come back into 141.80 and probably test this number around 141.50 again. I think the floor around is 141 for Apple right as of now. To the upside, if Apple clears 142.80, and then we are looking for a push all the way into 143.40. Not really plotting Apple beyond the hourly 50. That's about 143.80. Let's round that up at 144. Not really plotting Apple beyond this number as of now. Yesterday we were looking for Apple 144. It happened today, fair enough. But not really plotting Apple beyond the 50 on the hourly. If it clears there, then we'll reassess the situation to the upside. And if Apple clears below 141.60 to the downside, then we'll reassess the situation. And if it clears right about here, 141.50, 141.60, then we're looking for a bounce around 141. Cool thing. Anything in particular anybody is looking at? Market gainers. And 10 o'clock. I'm not gonna be in a trade until 10. The UMH numbers slated to come out at 10. Till that time, I'm gonna be if it's a clear move either to the downside or the upside. I don't know if it's gonna be a clear move in either direction, but if it does give us a clear move in either direction, then I'll put on a trade. If not, I'll simply sit on my hands till 10 o'clock or even 10:30 for that matter. All right. 5 minutes open. Let's get into live trading.